Hello, everyone. Welcome to today's conversation on CBDC, stable coins and tokenization in general. And let me welcome Nischal and Nappinai. Nischal is founder and CEO of WazirX, and Ms. Nappinai is a senior advocate at Supreme Court of India. Now, I would like to begin today's conversation by reflecting briefly on the recent developments in the last week, which kept everyone in blockchain and crypto space on toes. And thanks to some of the announcements by the finance minister in Rajya Sabha, that we will hopefully, I'd like to see a pro-innovation regulatory framework. Now, given this particular context, I would like to bring in Ms. Nappinai first and get her views on how we can have a regulatory framework around crypto, right? Since this is an evolving technology, do we need to rewrite our current existing laws, or can we tweak or modify the existing laws to suit and ring-fence entities who can work in the crypto ecosystem?
Thank you, Sharat. Actually, I would not say it's an either-or situation. It may be a situation where we may need both. We may need some new laws which will be specific to the field of crypto, including in terms of, and this is something we have to be prepared for, in terms of whether it's even going to be permissible or not, to what extent, if any, it would be permissible, and in what manner, if any, you will be allowed to continue in terms of having a future for crypto assets. So I don't mean to start off on a bleak note, but this is a reality check. So when we talk about whether we need to change laws or otherwise, there are two things here. The first thing is in terms of understanding that it cannot ever be legal tender except when it is a CBDC, the central bank issued currency. The other aspect is on whether it can or cannot be used as a payment system. And the last one is, do we go otherwise the way most of the Western countries have done in terms of treating crypto assets as securities? So if India were to take a stand in terms of 2 or 3, that is on payment systems or as securities, then the chance of both existing law as well as some addition to it will become relevant. So it is all contingent on what is the stand that India is going to take. And depending on that, we are going to see some changes in terms of the RBI Act, the Payment and Systems Act, then the SEBI Act and how it would deal with, and that is going to be a given irrespective, because we are looking at a situation where we move from ICOs to IDOs and etc. And all of these will necessarily need a regulator, and that regulator can only be SEBI. And of course, you also will, ideally, if we go by some of the other jurisdictions, there will also necessarily be some changes required in terms of our Contracts Act and other general laws also.
Thank you, Nappinai. And I think you rightly pointed about the changes to the existing laws as far as the RBI Act is concerned, because that will empower RBI to issue digital currencies. Now, at this point in time, let me bring Nischal in and get his views on what he thinks about creating a separate framework for NFTs. Do we need such a different framework at all for NFTs, or it can be kind of clubbed with the existing laws when we're regulating crypto?
Look, I like this futuristic talk about regulation of NFTs, because I think we're still on crypto, and we haven't really even I would say come to even towards the end of concluding what crypto regulations should look like. Having said that, I think it's going to be very important to see how NFTs get categorized, and if you look at the current state of online media, I think that's already the buying and selling of images. It's already happening. There's nothing different. It's just that it's centralized on systems where you can go and buy images today online. And if you look at it that way, then I think maybe NFT is one aspect which does not really require special regulations, because it's just art being sold online in a way. The only difference being it's really mobile compared to physical art, where it's difficult for you to take it around. Here is a new kind of art which can be digitally sent to each other. So I think I personally don't believe that there's a need for a deep NFT or a separate NFT regulation. I think existing regulations may be able to be applied on that, but there needs to be clarity though. What sort of regulations can be applied on NFTs? But I think it's a lot less complicated compared to crypto, because crypto ultimately behaves in different characteristics like currency, utilities, or security based on what it is built for. NFTs at end of the day is non-fungible, so there's no question of it being a currency. There's no question of it being a security. Ultimately, it's just a non-fungible asset.
Right. So if I look about or talk about tokenization of assets in general, whether they are real or real world assets or virtual assets, and that's where maybe a different approach when it comes to regulation or let's say tokenization of securities or stocks or even real estate for that matter. So on this particular question, I would like to get both Nishal's and Nappinai's views. What do you think? What do we actually need a certain framework when it comes to tokenization of real world assets, moving away from NFTs?
Yeah, I think if I go first, ma'am,
Yeah.
you want to go ahead, please.
No, I was actually going to say Nischal may want to go first.
No, this is hard. I think I would love to listen to you.
Please go ahead.
Okay, see, I think real world tokenization. I think the biggest issue would be honoring those things. Now, if you look at crypto, which is digital, it's honored by the smart contracts, and there's no third party involved. But if you think about real world tokenization, there is an offline element, and when an offline element comes, there's a central authority. Whoever is going to, let's say, take custody of these offline assets before they tokenize it. So I think you know, there'll be a lot of regulations needed before we get into tokenizing real world assets. It's not a simple digital only system where a software developer can just write a smart contract and push it on the blockchain. There will be a heavy offline element, and I think I don't know how the local laws are right now, whether they even support that currently. But I think there will definitely be need to be changes.
Yeah, I'm going to kind of delve into the technology side of it before I come back to the legal aspect. See, if we can make blockchain work independent of and without its referencing it, or without its reference to cryptocurrencies, then why not tokenization for physical world? What I'm getting at is a very simple construct here. So when cryptocurrency was created using blockchain as the underlying technology, the beauty about it was the product and the technology are intrinsically intertwined. But when we've been creating blockchain use cases independent of cryptocurrency, we have already delineated these two, the product and the technology, right? In the sense that you have a centralized authority playing a role at some level in many of the blockchain use cases. And these are already in play. So if that can work, my question therefore on the technology front would be, why not tokenization? On the legal front, it's actually really important, and this is why I said that it can't be either or, it may have to be both, is that if we are looking at a crypto bill, irrespective of whatever it may spell for crypto, it's very important, and I've oft said this, it's very important that the bill clearly delineates and specifies what is tokenization and what is permissible and impermissible in such tokenization. The way I look at it is a legal framework should ideally look at the use case of tokenization, the possibility of the investment framework and the consumer protection aspect, or the investor as a protection aspect, and then decide what should be the appropriate additions to existing laws or into the proposed crypto law as an exemption, exception, or a variation from what it understands as cryptocurrency. To club both, if you look at the 2019 draft of the crypto bill, for instance, it did not delineate crypto from tokens. The definition actually comprises anything and everything in digital form as an asset. Okay, a digital asset as opposed to a crypto asset also, and therein was the problem with the earlier draft. So when we are looking towards the 2021 draft, my hope is that whichever way the government wants to go, it should still delineate the two, crypto versus tokenization, and then explain what is permissible and not, so that there is certainty for investors to come in and also for users to adapt to it.
Thank you, ma'am. Now let me come to Nischal again and get his views on the Web3 front, where there's a lot of activity happening in the gaming space, right? And even the metaverse is also kind of expanding. And Grayscale Investments, they kind of quoted that metaverse is more like $1 trillion opportunity 5 years from now. So, what are some of the major trends are you seeing, and what are some of the opportunities for, let's say, entrepreneurs who want to build stuff?
Look, I think first and foremost, what is Web 3.0, and why is everyone getting so excited about it? Now, if you look at the existing products on the web, those are all part of Web 2.0, which is interactive, ways to be interacting with each other, like the social networks, and and end of the day, all of these interactions that are happening today on the internet have been sort of, you can look at them as 2D, two dimensional, which is more text and images. And Web 3.0, when you hear about it, uh, it's something taking this Web 2.0 and making it 3D, dimensional. And that's where blockchain games, for example, games where you can interact with people, you can buy assets within a game, and you can sell those assets. You can move those assets from one game to the other, thanks to blockchain and crypto, which make it possible. So it's sort of you're recreating the offline world, the real world, online, where let's say if I was to change my city and go to a different city, I can carry all of my assets with me and move. Um, in the online world, if there was, let's say, a game and you're playing it, and there's a new game that emerges, you have to leave behind all your history in this game and go to the new game and start all over again. But now with Web 3.0, what's happening is it's saying that you can move all of your game assets and everything, and then you can go to different games and play there. So you're sort of to give an example, you have a character, maybe in the future in the metaverse, wherever you play the game, it's the same character that represents you. So it's like you are the gamer in that online world. And this is what the metaverse is. It's just we are all spending more time online already. Why not make it more interactive and more real? And that's what is happening right now. And the opportunities seem to be starting with play to earn games. And play to earn games, while traditionally we think these are fantasy sports and all, this is very different. This is any game can be made play to earn. The way to do that is to look at any game as a real world economy. And what happens in that, there are people who enter the game early, and they create their assets in the game. And let's say now I want to enter a game which is, let's say, 6 months old, and I want to expedite my experience there. What do? I spend money to buy assets in the game, to skip that level 0 of the game, or level 1 or level 2, and maybe go directly to level 5. Now when I buy these assets, I'm buying them from other gamers, not from a gaming company, which was what was the traditional gaming system, where the gaming company sells assets to everyone, and these assets are unlimited in number. So it's just a revenue mechanism for the company. In Web 3.0, the assets are limited, and they're created by gamers, and they're sold to other gamers. So this is how I think gaming and Web 3.0 are going to get together, where earning becomes one of the new use cases apart from leisure. And I think we'll see evolution. Like, I think I was just reading a report where digital land worth over $100 million has been sold already. Now that's amazing. That seems insane to a lot of people if you think about it. Like, what's a digital land? But there are games where there is a need for you to own these lands, and people are really spending money. Now this number still seems like a small thing. If you look at the number of people into games online, that's about 2.3 billion people are into games online. So it's a huge market. And I think we'll have to see over time, we'll understand how this evolves. But Web 3.0 is all about interactivity.
Thanks, Nishal. Ma'am, I have one question, especially on stable coins and CBDCs and the narrative about coexistence of these two. But some countries, they're kind of, let's say, brushing aside stable coins because even CBDCs, they're a couple of years away. So what's your view on the coexistence of these two, let's say, sovereign currency on stable coins, right? How are they going to coexist?
I think the first thing to answer would be: is there going to be an existence or continuation of stable coins at all? Because there's a lot that needs to be addressed if stable coins are to exist. Of course, the first issue will be about cryptocurrency itself or not. And if yes, cryptocurrency, then in what form? And stable coin kind of like makes this assumption that merely because it is predicated on or uses as its base fiat currencies or legal tender, and therefore creates a sense or a perpetual sense of stability, stands on a better footing than other crypto assets, right? But the minute you start talking about any form of crypto asset attempting to ape or do the functions of legal tender or of a payment system, then it comes under the regulatory framework, irrespective of what its underlying value is likely to be. The second problem that stablecoin poses is to banking systems. It may claim that it is, creating stability as opposed to volatility of cryptocurrencies, but it is still taking away all other transactions beyond that basic value generation away from general banking or financial systems. How far is that really going to be? How far will it impact an economy of a nation becomes therefore relevant. So my take would be there is no comparison between CBDC and stablecoin. That is like chalk and cheese, and the chalk here, of course, being stablecoin, and there is no way that you can even assume that one can be compared with or posed against each other in terms of its existence or its functioning. CBDC by its very nature will get its legal basis because it is issued by a central bank of a nation, right? Stable coin by its very nature is of a private entity. If you're talking about the arbitraging that stablecoin does, again, the issue will arise about why stablecoin, why not the existing forms of arbitrage through NBFCs, etc. So there are a lot of other legal issues that arise, but bottom line is this: there is no comparison between CBDC and stablecoin. The two are too far apart, and I would say that stablecoin still needs to wait for affirmation in terms of the core of its existence in terms of cryptocurrencies being allowed or otherwise. And the second of it be in what form or manner can stablecoins exist. And on that front, I believe that there will definitely be a need for clear and precise regulatory frameworks, if not legal itself, in terms of how and to what extent stablecoin can function, exist, or thrive for that matter in this scenario.
Right. And the fact that payment giants like Visa and MasterCard, Visa especially, they're using a USDC for settlements on their network, right? And in US, the Federal Reserve, they're trying to regulate these stablecoin issuers as banks. So I would like to pose this question on stablecoins to Nischal and get his views on, do we need to, let's say, emulate the same model where we can license our, let's say, payment banks to start maybe issuing stablecoins? Is there a model which can, where both private entities can also start issuing stable coins? Do you see that far away, or it's too early to comment?
You mean for India?
Yeah, for India. Yeah.
Yeah. Look, I don't know. I think from a legal point of view, there might be issues. But when you look at stable coins and what is happening in the US is while the government needs time to understand and implement and eventually roll out CBDC, it's not a small exercise for any government around the world. The question is, do you want to be participating in this whole digital economy sooner than later? Now, if you look at stable coins, they are a way for the governments to say that let us spend our time in figuring out CBDC, but let's not lose out on the innovation that's happening. So let the startups do the work, more like your developer ecosystem for a large company. And we will figure out on the way. There's no hurry. And then countries that take the approach of only CBDC, the problem for them is they risk that time to market, which is going to take several years. In that time frame, stablecoins might permeate really deep into the whole crypto ecosystem and make it difficult for new CBDCs to break through. So I would say that look at stablecoins as that window where before you launch a CBDC, you still want your currency to probably permeate the ecosystem globally, and that's where India can really benefit. But I think as on today, we don't have a stable coin from India, and I'm not sure if we'll ever be able to unless laws are changed around stable coin.
Thanks, Nischal. Now, let me come to one question on, let's say, more structured products. Like Fidelity, they launched their Bitcoin ETF in Canada. So in India, we have certain sandboxes, the Gift City sandbox is there, the Civi sandbox is there. So let's say whenever the crypto market matures, do you think going through a sandbox would be the right approach for more structured products? Ma'am, this question is for you. Maybe Nischal can come in later.
No, please, Nischal, go ahead. I think it was actually posted.
Okay. See, the thing is, I think sandboxes, honestly, I think they should come sooner than later. If you want to go with the sandbox approach, it's not for when the market matures, but it's for you to get involved at the early stage, and try to get in and understand the ecosystem. And let's say if certain things look risky for the governments, then they can create the sandbox and try to come up with some use cases and some experiments in sync with the industry to see what the effects would be. And that's a great approach where instead of just in theory figuring out the pros and cons and being worried, you could actually put some of those into practice via a sandbox. Now the question is, because crypto is such a vast field, and there are so many aspects to that, the sandbox approach will probably work for the bridges. What I mean by that is, let's say, going from INR to crypto. The bridges is where you can bring in sandboxes. You can't bring in sandboxes, for example, purely decentralized products. Let's say a decentralized app or a protocol on the blockchain. You can't bring sandboxes there because they're completely devoid of any geographic boundaries. But if you look at any business that has to deal with INR and crypto, for example, exchanges, wallets, and anyone who provides you access to crypto and INR, I think you can sandbox them, and you can try to figure out how that works out.
Thanks, Nischal. Ma'am, your views on this?
Yeah, see, sandbox is always a good thing, but yeah, my question is going to be sandbox for what? Are we talking about crypto? Are we talking about tokenization? Are we talking about blockchain? All of this becomes very relevant. If you look at the regulatory frameworks that have been evolving and also policy documents, you'll see, be it AI, be it any form of technology innovation, there has already been an adaptation of the sandbox mechanism. SEBI has, for instance, already made it part of its thing. If you look at Niti Aayog's AI document, you'll find similar examples for it. So, as an approach, definitely, there is. I don't think there can be any two ways about it that a sandbox mechanism is a good option. For what and at what, and as Nischal rightly said, it has to be earlier than later because it's primarily meant for an innovation process. But here, the real issue is going to be where does India? I mean, India cannot continue to straddle the fence. It has to take a definitive decision in terms of its legal position, and that is what will really help in terms of helping and supporting and buttressing innovation thereafter. Because then anybody who comes into India as an investor will have confidence of their investment remaining safe and secure. That legitimacy stamp is really important, and that only a regulatory framework can give. And that's why I've always been batting for that rather than this whole, utopian claim for the crypto enthusiasts for a self-regulated or non-regulated process. But today, it's reached a stage where the markets are fairly robust. It's already built effectively, but the legal frameworks still remain without, crystallization. And therefore, I would really hope to see some definitive positions and clarity through law as an enabler to help further in terms of innovation, whichever way it may take, because we need innovation. We just need to know which direction it has to take. That's all.
Thank you, ma'am. So one last question to both of you, Nischal and ma'am, is that we have to move beyond being a product nation to start building infrastructure companies for the Web3 era, right? So what can be done to maybe accelerate that pace from being a product nation or let's say a back office of the world to be the next global and crypto hub of the world? Nischal, would you like to go first?
Yeah, I think a few things. First is definitely regulation. Bringing that in or a clarity helps the entire ecosystem. It helps you as an entrepreneur to start up because you don't have to worry about the future of that industry. It helps investors, VC funds to invest in the startups because they don't have to worry. It helps employees join these startups. It helps people develop skills in that technology if there is clarity from a regulation point of view. So I think that is going to be one of the prime importance. Apart from that, I think it's about education, ensuring that everyone understands this technology and what its roles are. There's still a lot of confusion around this, and it is expected from a new technology like crypto. But I think education is going to play a very important part. Uh, the third is, I think, honestly, India is primed to be a crypto leader because if you look at the demographic of the crypto audience, it's in the 20 to 30-year range, and India being a young nation, that's one of the largest demographic that we have in our country, and it's a bunch of enthusiastic people who want to learn, who want to understand this ecosystem. So I think India does not have to do a lot to, let's say, be a global leader in crypto, and it's a $2.5 trillion market out there, and I believe we can capture a large part of it. All we need is a few things where I think regulation is probably at the top ask, and I would say that's probably the only ask. If that gets done in the right way in India, I think India will be a top crypto nation because all of these infrastructure projects, protocols, dApps, we are seeing everything being built in India. And in fact, now I think there are over 350 startups in India. I think that number is far greater. This was an older figure, and there are 15 to 20 million people in India into crypto. So we have that whole initial, I would say, stage set for success. All we need is some clarity, I guess.
Thanks, Nischal. Ma'am, over to you.
I think we have to step back and not just talk about regulation in terms of crypto. What we really need is a more robust implementation in terms of intellectual property right protection. So when we talk about innovation, Sharat, you mentioned about a product nation. Even for that, we had to wait for such a long time for patent laws to become more robust, right? And therefore, we fell behind. In our attempt at protectionism, we actually fell behind. So today, be it in terms of patents or copyrights, be it in terms of whichever form of intellectual property or mechanism we want to follow, I would want more robust enforcement mechanisms for IPR. And of course, what I already said about how regulation can and will always be the enabler, though many may assume that it is a stumbling block. Trust me, systems can actually work in your favor too. Do not distrust systems. It is now time for us to see how regulation can help innovation, and I hope that future is closer rather than later.
Thank you. Thank you, Ms. Nappinai and Nischal, for sharing your insight. It was a pleasure talking to you. Thank you.
Thanks, Sharat.